Welcome everyone, Simon here from the Wales of Wall Street. Hope you're doing fantastically well today. Sorry for the shortage of videos, fractured sternum a couple of weeks ago. And yeah, very painful. Couldn't breathe properly for a while, but here we are. So apologies if this video is cut a bit here and there. It's because pretty much don't want to die. So just stopping and starting the briefing. And instead of me pausing for a few seconds each time, you guys will just have to indulge in some potential flip outs of content. So hopefully it'll be smooth, but just giving you a warning. Guys, we're approaching, can you believe it, nearly 700 videos already. Thank you for your massive support across the world. Don't forget to smash that subscribe button if you have not done so already and you're new to the channel. Welcome. We cover loads of different topics and discussions as always. The one today, XDC, which again, going back to this point, various injuries and work and stuff, the videos haven't been coming out as much as I want them to be. We'll certainly get more and more involved on that as time goes by. So XDC, I haven't covered this for a while, and we're just going to be talking very quickly around this tokenization topic. Also, XDC are involved in a couple of events the last few days and the weeks coming. And also, I just wanted to pick up on a couple of points around Oracle usage and things like that as well, because people are always asking me, like, why is XDC such a low price, this, that, and the other? And we just got to remember that everything is so early still, and the development and everything. And I wanted to show a few examples of some of these kind of Oracle buildings, these aspects of utilizing tokenization in various different areas, both at different levels as well. Enterprise level as well as public too. So let's go into this one. XDC is one of my favorite projects to talk about, and certainly one that I love to have in my portfolio. So the most recent event that's literally happening right now as we're recording, I think it's been maybe actually yesterday as well, can't remember, but this topic around explore the future of finance with tokenization of blockchain, it's already started. There's quite a few really cool panelists and speakers there, of which one of them is Sunil from XinFin Network, the trade and payment COO. So pretty cool title there. So lots going on around that area of what they're trying to achieve and what they're trying to do, and get that word out. And the reason I'm bringing that point out about getting the word out is this. This was actually distributed a few days ago. I think it's like a couple of weeks ago actually, sorry. Again, from some of the team at XDC presented this information, but we've got Harley here who's done a great job of putting this into a nice little image here, which I think is originated from the City Group. So going back to this, actually, I think they're both at the same event. So there's a lot of collaboration going on here, a lot of interest in sharing of information across various different projects and technologies. It's great to see this development. But my point being, we talk about trade finance and how massive this is. Okay, and I just want to pick up on the point before we go into these little circular, wonderful visuals that we've got here. I mean, tokenization can obviously be looked at in a multitude of different ways, and different principles of what it can achieve and operate within, right? So for me personally, I want to make it clear that there's a multitude of channels and avenues that we can go down with tokenization. So I was very fortunate to work in Web3 over the last few years, and particularly in gaming. The tokenization aspects within gaming are absolutely huge, guys, and it's the very early stages. Opportunities for people to be able to move their avatars in and out of games, and if you think about the games being on various different blockchains in the near future and the near years to come, that's really cool. And one of my favorite films, I always mention, like Ready Player One, where you have that mentality of a character going in and out of games, but also all the weapons and the skins and all the items that you pick up, they're actually part of you. But that's great when you watch the film and it all looks really exciting, but it got me thinking. And it wasn't until I worked in Web3 gaming where I started getting the answers to the film. I started going, oh, this sounds very familiar. This sounds like a film. And then it clicked in my head that actually this is demonstrating what's to come. It's not as easy to, you can't get something from Call of Duty and run it across to Rocket League or anything like this. Obviously, like, you have to have I call it like the law of gaming, if you like. You can't have some physical things going in and out of various games because it just won't work, or there's no need for that kind of element or item, right? So there's this really cool aspect in tokenization of assets within games, even the currency aspects of it. I call it like GameFi if you like. But I think that's going to be a really exciting topic. But then we get to the real heavy stuff, guys. Digital asset tokenization is absolutely massive. Of course, when we look at the Web3 principles, the use cases of the abilities for things like the DAO governance. So this is obviously like from the voting mechanism. You've got things like cross-chain assets, in particular, like I mentioned with the gaming side of this. This can also be used in other areas as well. So the digital asset of even potential physical assets. And this leads nicely onto like that kind of real world aspiration. We've talked about this in a multitude of videos before, where, as an example, and this is where fractionalization becomes really interesting. Let's say I have a Rolex, which I'll probably never have in my life. Even if I was a multimillionaire, I don't care for materials. I'm not interested. But we'll use Rolex as an example because it's obviously a heavy value item. Pretty much the same cost as a house in most cases, which is crazy. So you got this Rolex, but you've perhaps maybe wanted to buy this with other people as an investment, as an asset class that you want to sell in the future, whatever. At the moment, you could just talk to your mates and go, yeah, we'll put in, chip this in. You might sign a contract or whatever. But the physical tokenization of this means that actually, as long as people sign those documentations like digitally via blockchain, where it's all transparent, it's all verified, processed, etc., the algorithm of data of how much it's worth, etc., is also in there from a transparency perspective as well, rather than taking it to some random shop and someone comes up with a miraculous number, takes a fee, and so on and so forth. You could have that asset and fractionalize it to the sense that actually you're going to sell a part of that Rolex to other people around the world, or even go, oh, actually, I want to convert this into more shares or an opportunity for extra ownership of this item because you might want to raise funds for something. If you think about that principle about shares and dividends and things, it's a similar process and principle, right? So you've got all these kind of things, but real world asset tokenization can also contribute towards things like gold. So we talk about like bullions, for example, big bars of gold. I've never seen one in my life. Don't even know if they exist or not. I just think it's all marketing personally. But apparently people can have bars of gold, whatever. But the point being is that all of these things can be digitalized as well in terms of storing of it, the trading aspect of it, and actually the ability to transact, as we've seen with like P2P areas of exchanges, and the ability to sell tokenization assets, sell cryptocurrencies on exchanges to other people in that format. Something that's perhaps not as easy to do in the real world scenarios of being able to trade these kind of items. Things like IPs, so intellectual properties, of course. Art is a big one. Now, we've seen the NFT side of that over the last few years been a bit mental, but actually the commodity of a piece of art, specifically one that's perhaps very rare or very expensive or high in value, again, the distribution of that, the sharing mentality of that, how does that actually all work, and how can you tokenize that kind of thing? So there's all these things, carbon credits is a big thing I talk about. The energy side of things is huge. We talk about the ability to buy and sell energy as a component that you can transact across the world. If you've got surplus energy, you can sell your credits to other people. How does that work on a peer-to-peer system? That's when things like blockchain elements of oracles, APIs, and things like the XinFin network, which operate, of course, on a hybrid model in the sense that they can achieve things both in an enterprise level and also at a consumer level potentially as well. It really opens up the world and the mechanism, right? So there's a multitude of other reasons why tokenization is such a big thing here, but this is where the big focus is on tokenization. So when we look at these circular attributes here on the screen right now, we are talking here about some, not all of them, but certainly some of the bigger areas of interest in terms of value of why tokenization is such an important topic and why it's being talked about more and more right now, and the utility is arguably kicking in. So you've got, for example here, real estate. We talk about projects like Proppy, for example. Even Hedera are doing a lot of this right now. The estimate here, look at this, 2030 estimate, $1.5 trillion worth tokenization. 20 trillion as an ultimate market network as it is. This is incredible. And Proppy are doing a good job of it. There was a couple of others I was looking at the other day. It's really fascinating. I need to dig out what company it was, but you can literally sit on my lounge right now and go and bid or get a fraction of some properties in Detroit in America, which is an up and coming area of where these apartments and stuff were, but they're selling them as NFT tokenization, all transparent, verified, processed on the system. There's no real estate agents. It's just, the usual small little currency fee, network fee, etc. They obviously take a bit of a fee, but if you think about all the intermediaries and stuff like that from an estate perspective, how much it could be sped up with the utilization of smart contracts, the speed of blockchain, and all this removal of cross-border payment fees, the checks that are involved, the registry forms that are involved. It can all be automated, digitalized, and more importantly, the actual asset itself, when we talk about real world asset tokenization, housing, real estate, huge. Private equity, venture capital on the right-hand side here. Numbers not as big in terms of tokenization, but the market is there. So if we can look beyond 2030 and suggest that actually over the next 5 to 7 years, we're going to see the development, we're going to see the progress, but actually that doesn't mean it stops there and then. We're talking about the next 100 years, guys, of how things will develop. Securities and finance is actually a huge topic. That is massive. 42 trillion market there. Tokenization, I don't know where these estimates have come from. I know they come from Citigroup with some form of information and surveys and stuff, but I think that number is quite low. I do think more and more security related finance will come through blockchain in its droves as it gets switched on more and more. But either way, still a massive amount of money there. Trade finance we've covered in a multitude of videos. This can relate to so many things, guys. Even things like supply and demand, the actual supply mechanism, the supply chain in general, whether that's shipping for aircraft, etc., whatever it might be, is absolutely huge as well. And this part here about the quasi-sovereign debt, non-financial corporate, this is really interesting too. That's an absolutely giant number. And it's interesting, when I was at the Digital Pound Foundation event, the other week, one of the opening speeches was about what is actually money and the actual element of credit, tax credits, debt, and all this kind of stuff. Think of that as tokenized assets as well. All these principles of finance in general. The numbers are staggering. And as I said, these are 5 pillars. There's more. There's way more than that. But if you look at this, we forecast $4 trillion to $5 trillion of tokenized digital securities and $1 trillion of distributed ledger technology-based trade finance volumes by 2030. Now, people always ask, as I said earlier, the price of XDC, the price of tokenized assets are so low still. Why? Because they haven't been adopted yet. They're not in full utilization. We are in an exciting development process. This is why you see all these various articles here and there about quants been matching up with the XDC token and the utilization of oracles and things. Here we are, we see Chainlink. These are just in the last 2-3 years. Doesn't mean you click your fingers and it starts working. It means that these guys are working together for an ultimate goal, and that could take years. The development teams keep building, the partnerships, the ecosystems keep building. Here, for example, Beginner's Guide to the Apothem Network. This is massively related, to the Overledger that we covered last year with XDC. All of these things are going on in the background, guys, and I really need people to sort of start thinking about the longevity of stuff. Okay, XDC is a relatively newish token. It's a newish project in terms of comparison to many other chains, many other technologies that have been out there. Yes, it was the XDC E token before. It's gone down its own kind of protocol systems. We now got, what's it called? I can't remember the exact terminology of the derivative of it, but they've got their own protocol, which is a spin-off, if you like, of an EVM off Ethereum to create its own full ecosystem and project moving forward. The ecosystem is consistently building. So we're seeing a lot of really interesting companies on here, a mix really of, you've got wallets, you've got dApps on here. Impel is obviously absolutely huge. There's a lot of compliance towards ISO 222 specifically with them. Here's, for example, the alternatives, the cost-effective alternatives to Swift and SafePay. Well, we know that Swift is doing a big job at the moment, and I speak hands-on in this aspect in the sense of the Digital Pound Foundation event I was at the other day. Head of technology was there from Swift, and he was very much talking about the progression of CBDCs and stuff like this. It's still a lot of work to do, a lot of consortiums, a lot of surveys to be done still, and a lot more technological advancements to be done. But there's competition, and that's why it's all heating up, guys. This is why it's exciting whichever way it goes, because of all these establishments, even at these hierarchies of existing finance systems, they're scared, guys. They're running out of time because they know all these decentralized asset opportunities are coming, these decentralized blockchains, the opportunity for a new financial world to occur. That's why they're all of a sudden, picking up really quickly. They need to get this stuff sorted. So we're talking about exchanges, all of this stuff. And it's really building a really interesting, nice story about XinFin as a whole, of what it's capable of doing. Because as I said, we know its capabilities of its speed, its transactions per second. We know that it's operating a hybrid model and an opportunity for various different levels of financial requirement. And we know that it has great partnerships. We know it has a great ecosystem. We know it has great people working behind it and for it as well. Remember Andre Kosterman, absolutely huge in the space. He's talking significantly and very heavily, more recently than ever before, about the tokenization aspect, trade finance. Do the dot connecting here, guys. This is all part of the plan. You think about all the banks involved in this sort of TFID protocol and principle of innovation as well. This all loops around to all the technologies that these guys are working with and wanting to work with as time goes by. It will all get switched on eventually. And as I said, 90% of the world won't have a clue it's going on, but we know in the background it is. Here's an example where we talk about oracles and the interest of tokenization. This isn't, by the way, linked with XDC. I'm just bringing up the point about industrial assets, tokenized assets across the world. Microsoft partners with Wave Enterprise to tokenize industrial assets. It's all about the tokenization, the utilization of corporate blockchain solutions, DLT systems, and worldwide. It's absolutely fascinating, guys. These are huge companies, huge projects in the existing Web 2 world as well, coming into the Web 3 sphere. And it's going to be projects like XinFin, XDC, tokenization in behind that are going to be powering a lot of this stuff, especially as more dApps, more exchanges, more wallets, more utilization of the systems and the blockchains come into fruition. That's where the XDC token takes its toll moving forwards and becomes a utilized asset more and more. That's obviously how the fluctuation of the price will increase over time, because there'll be more scarcity, more need for this token, and more need for the developers to use it on their platforms as well. We're in a very lucrative position as retail investors to be able to have that availability to be able to invest in these things. Who knows what's going to happen in the future? They might block us completely. Who knows? But right now, there's an opportunity to hold something that is very, very imperative for the future of finance, and certainly for trade finance and tokenization of assets. I just wanted to rip those points across because it is a fascinating topic, and really hammer home that just because a price point is so low right now doesn't mean they're not doing anything, and it certainly doesn't mean that we should ignore what is to come. I'm an investor in stocks and in crypto and loads of other things as well, but I don't just sit there and go, I want to be we'd all want to be millionaires overnight, obviously, but look at the transparency of the last 2 years. We see these fluctuation cycles. Even a couple months ago, people were going, oh my God, the bull cycle's coming. I'm saying to guys, people, just be calm. We're in an economic crisis. This isn't going into a bull cycle. It's impossible. No one has money unless they're using debt. So we've got all these things. We have fluctuation of information. But the principle is, when you take out the whole cost fluctuation or the price of a token, whether it's in a cycle of 1 year, 4 years, whatever, the principle being that in 10 years' time, this world is going to be so much different to what it is today. And because of things like blockchain, AI creeping in significantly, which will interact with blockchain heavily as well, as we know. It's really exciting stuff, guys. So hopefully we'll continue on this journey together. I'm trying to accumulate XDC as much as possible as time goes by, and see how we get with that. But that's a good point actually on that roundup there, to jump into the price of XDC. Apologies, I'm stuck on quant here. I was doing some research last night on the drop of the market in more recent times. But XDC here, still floating around that 3.3 cent mark. It was always one of these things, guys, when we go into these nice fluctuating patterns upwards, it is hard not to FOMO in. And I've done a good job personally, I'm speaking personally here, of the last 3 months not to jump into XDC, because I know that it will be coming down at some point. We had some great movements here with some great announcements of XDC over this time in March, but the fact of the matter is, it's too spiky, it's too much of a steep climb. that's not going to sustain itself. If we're in a bull cycle, it might be a completely different story because there's momentum going. But as I said, all the macro events, the economy and everything else, it's just not going to withstand it. As strongly as I believe in XDC and the longevity of it, you've still got to understand the principal points of data in historic areas of the charts, and also identify like where these support and resistance lines are. Okay, so we've got our fib levels. I'm just going to move this across. Hope it doesn't move too much out of the way. I'm just going to move across this one. Actually, this was from a while back, but it's still relevant because if I just move it, hopefully don't move it too much. I'm just going to line those blue lines there, which was about there, I think. It's still in play. So if I just zoom in, this gives a bit more clarity. So we've got the longer term, one of the shorter terms. There is an argument to say that I can actually prove this a bit more by taking this one as well. So we're currently playing around with this area here, 3.4, as I said, 3.4 cents. We had a nice upturn to this point up here at 4.7, albeit it only lasted really a day. Took itself back down, and we gradually started building ourselves back up to this area. This matches very nicely towards some of the old previous trigger points. Now, if you remember, probably don't remember it, but I'm going to remind you, March 2022, we drew this area of interest and these areas of interest. Unfortunately, because this chart only goes back to 2021, it's a very interesting points of areas of resistance. And we knew that at some point we'd come back to these areas. Even if we went down, we would come back up. And we've seen that. It's not too far off. But if you look at this drop point here on 24th of February, I think, and some mix of volatility around here in May 2022, it's exactly where we have been in these areas. So we took that downturn as the whole market did. This isn't an individual case. The whole market's been doing this, right? In any asset that you pretty much look at. Yes, of course, the shapes look different, but the downward trend has occurred for sure, even with XDC. So you've got these areas of data and interest. My point being about this is there's a lack of them in this area. We've only got this bit here back in May 2021. Got these areas that we just mentioned, and we've got this area, which is on the flip side. We're now not in that downward trend. We're now in the movement of trying to push upwards and seeing if we can find these new levels of support. However, as I said, the climb is quite steep. It's too quick in my opinion, and I knew it was going to be coming down at some point into these buy areas. This is not me chucking all my money in at one go. These are my DCA opportunities, which I drew out in multiple different charts and videos that we've done on XDC over the last few months. And it's kind of nice when it comes into play. It's not suggesting that we predicted the future. I'm not going to sit and go, we told you so, or anything like this. It's all about learning from this and understanding what this all means. So when we have these waves up, the gap is too big. There's not enough data to suggest that, oh, we can't stay up here. There's only 1, 2, 3 opportunities here that we've seen support levels at. And even then, it rejected twice. For sure, it went up, but this one rejected significantly. It dropped phenomenally, really, over that period of time. And now we're testing it up on the upward trends. But as I say, it's too quick. So now we're going to start seeing, in my opinion, these checking levels. So we've got this one that's come in, which we marked off on a few occasions in the past. That's exactly where we are right now, in line with pretty much both the long-term charts and the medium charts as well, both the one that we drew way back here and one of the newer ones too. So if you can see here, if I just jiggle this about, you can see it's matching up with this dark blue line. And if I just move this one around slightly, so you've got my pattern here. In fact, if I just move that across, you'll see it's bang on in line with these as well. So it's suggesting that we're probably going to see some testing of this area. I'm still anticipating it to come back down and test this area because, again, not too many data points suggesting that we should even have gone past that level. It's now going to retest it. And that's, again, another buy area, the low 3 cent mark. Will it come down lower than that? Absolutely, potentially. It really depends on its ability to hold with the amount of wallet holders and things like that. And by the way, one thing I didn't show you, which is definitely worth showing you really quickly in a second, was a post from Sunil. If I can just quickly switch back to show you this, because this is my point relating to this chart, is the wallet addresses. These wallet addresses have been increasing over time for XinFin XDC, which is great. And it's comparing itself with some really good chains and asset classes out there for sure. But those numbers have increased quite well and approaching nearly almost that million mark very, very soon. So we're getting more and more holders, getting more and more people believing in the longevity of this as a project and as an asset class, which brings me to my point that if we're talking about do we come back down lower than these current areas, there's absolutely a possibility. But I think as the wallets are growing and everything like this, more and more people understand the longevity of it. The awareness is increasing of XDC. I'd be very surprised if we dip back down to these kind of 2 cent levels, but I do absolutely appreciate that we would probably come back down maybe to 2.5, and between those kind of markers at least a few times to check that. We may come down back to that 2 cent mark, albeit very small amount of time, to then come back and retest these higher areas. So an overview of this is that there's plenty of DCA opportunities. Don't all of a sudden go into FOMO because you see something absolutely rising. They're one of the worst times you could arguably jump in because there's so much uncertainty. But I'm here for the long run, which means for me personally, I'm trying to accumulate at the best, lowest price possible areas. And to do that is great to do the DCA dollar cost averaging format, which is what we're trying to demonstrate here. And the things that you can look at and try to do and try to comprehend to try and achieve that kind of strategy. So at the moment, 14-day on the RSI here, the relative strength index relating to here with the green, blue, yellow markers. We look at now 26 on the 14-day, which is showing a great entry point. I'm quite interested more so on the 28-day. This has gone under the 40 mark, which is a bite point for me to buy some manually. Again, not go full in, not go crazy, but certainly grab some because we might retest this area and jump back up. That's the whole point of looking at the data historically. If we do break that downwards, as I said, the next sort of fib levels that are coming into those kind of areas are around that lower 3 cent area. So don't be surprised to see that. But on the 90-day showing at 49, if that comes down to around 45, that's where I do start seeing us hitting those 3 cent areas. And again, a double confirmation that is a good area for manual insertion into your portfolio. Again, this is not financial advice, it's just what I'm doing. This is my observations. It's what's been working for many years for me now across multiple crypto assets as well as any other charts and stocks that I invest in as well. So don't rule out the lower ones as well. As I said, I've always got a pocket of money available at these lower regions, but certainly the immediate effect is around engaging my interest around this area. And you can see on the performance indicators, these are trickling down slower and slower into the negatives again. Rewind 2-3 months ago, guys, most of them all in green, and it did concern me a bit. I'm glad to see we haven't had a rapid decline, but I did know we would come back to these areas. It's been a very hard thing to do, to hold and not get emotive and just be a bit patient on this, and I'm glad to see it's kind of come into these areas to get some lower regions. I didn't want to be buying at 4.5, 5 cents again. I'm happy with these 3 cent areas, and hopefully, fingers crossed, selfishly, 2.5 and 2 cent would be brilliant as well. It's still up on the year to date, but again, the reflection is that we're in this downward trend like we are with a lot of assets at the moment. Do pay attention to things like the interest rate hikes again, the energy situations, the other economic macro level events, they all contribute, guys. Just be wary of all of this stuff as we go along. But we'll do another XDC video in the coming weeks. My breathing's better now, as I said, so I was quite impressed actually. I got through this whole video without having to take a break. So thanks very much for your patience, guys, and apologies again for the lack of videos. We'll hopefully get back into the swing of all this again. We'll see you in the next XDC video. Leave us comments below what you've been doing with your XDC. Have you been buying? Have you been waiting like I have? And let me know what you think about tokenization. What do you think is good and bad about it? What are you excited the most to see maybe digitally tokenized? All those great things as well. Leave the comments, always love it. And any tokens and assets you want us to cover that we don't do already, please drop those in as well. Happy to cover and research loads of other things. Always love learning. Thanks for watching, guys. I need some water. Take care. Bye-bye.